Welcome to Invest. We'll talk about investing, finance, or professional development. So, with respect to Neo, this is a question I've been getting a lot lately. I haven't covered stocks in a while, but if you follow my Patreon, you know that Neo is one of my biggest positions that I have, and I'm currently down quite a lot right now. Just to be honest with you, but collectively, this is a problem that most people have been having if you own Chinese stocks. The technical level for Neo is no longer traded being reflected on the fundamentals anymore. This has truly just been a downward escalator for quite some time due to multiple different factors that is exogenous and out of our prediction, right? Is with respect to the Russian-Ukraine war that seems like it's been digressing on a day-to-day basis, and it's been kind of that jerk and pull type of emotional roller coaster driving lack of confidence among investors, obviously from uncertainty and fear mongering. In addition to that, with respect to China, there's some geopolitical tension among internationally. As most countries are performing sanction onto Russia, but China still tries to sustain and maintain their relationship with Russia because of the trade dynamics that is cultivating. So I guess Chinese stocks are being punished for that. Obviously, Neo's being traded on the U.S. market doesn't really help a lot, right? In addition to that, with respect to the supply shortage on the chip shortage, right? Also in combination with the sanction that's being performed in Russia, a lot of commoditized type of items that you need to assemble a car, a lot of the parts are becoming more expensive now. Combined with the oil prices that's also inflated as well. In a profitability margin perspective, a lot of auto companies and also on the consumer purchasing activity front has been compressed due to a foreshadow of a recession that's coming. That doesn't also convey confidence onto stocks that are in the automotive industry. In addition to that, the COVID Omicron affectation, which is more the ancillary and relatively kind of a secondary factor in comparisons to the war cultivation, is still in the lingering type of momentum, right? So we're not really out of the woods, right? A lot of geopolitical tension, a lot of negative headwinds that's going our way, on top of obviously the interest hikes that we've been getting jerked around on basically like a bi-weekly basis right now. And whenever you see that type of consecutive affectation that have not been conveying the most confidence, we've been driving more of a de-escalator, right? Forming higher lows on a weekly basis, driving this escalator downward trend. So I've been getting this question around like what's the technical momentum that's currently cultivating right now. Let's just dive into it. So right now we are, in terms of a technical perspective, right, we are still in a downward trend. But in a fundamental perspective, you translate all the financials on Neo, like we are at a significant discount right now by like 50 something percent. Like Neo should technically trade around like the mid $30 per shares at the moment. But with the 1607 right now, obviously down about 10%, a soft market closing on Friday, it's definitely, obviously a large separation in terms of what's real, in reality on the financial versus what Wall Street, which is like technically like a popularity contest is giving it right now, right? So the reason that we're kind of gliding on a sideways fashion around like the 16 is because 16 is a relatively consolidated level. If you look into the historicals, we had a bunch of consolidation zone here. If you look closer, right, this is like a bunch of zigzag line that we've been hovering around that level. And if we break this level, the next level ideally we'll go to will be somewhere around like the low, like the 14 to like $15 level, right? But do we see that happening coming, right? I think those are the next level we need to look out for. I would say I give that a relatively low probability because of the fact that we've been selling off for basically the last, I would say, 5 weeks so far, which is a elongated time. And at the same time, we've been bleeding quite, dramatically. And we are really oversold at the 31 out of 70 at the moment. So reversal should be happening shortly. But if you look into the MACD front, right, you're still in the curve down mode. But eventually, we're gonna see some sort of a curve up to, allow for the momentum to get picked up, right? So we are relatively depleted right now. So again, with my G-force analogy, right, as you go further drilling oil in the ground, the market's gonna look for a reason to rebound, right? So I think this is a relatively good opportunity to further dollar cost average and buy it. And if you own it right now and you're down a lot, um, just hold on to it. Do not sell, because these are definitely not the time to sell. These are the time to reflect and just hold on, and just believe in the long term game and long term vision of what this stock is meant to be doing. Knowing the fact that fundamentally the financials still reflect a strong growth, right? But just because of the exogenous factor and Wall Street being a popularity contest, and optically speaking, the perspective on Chinese stocks and specifically for Nio, which is a high growth stocks as well, doesn't do a lot of favoritism at the moment. So that's why it's driving this sell off, right? But these are the part of the games, right? Investing, you never always green. You're not always making profits. You also have to learn to practice patience, and allow for the fundamental to take in over time. And right now, this is a clear gap of separation. So buying in would make a lot of sense for you to capture long term gains. So something to think about. And if we do gonna reverse back up, the next level of support will be somewhere around like the $20, and you could see that clearly we have a large gap here, right? So as we go up to 20, the next level will be the 24, right? And as we get to 24, this will form like a new ascending uh, escalator, which will give you a presentation on the reversal of the stock, right? And then you can see that there's a gap here. So that means we have a high propensity to fill the gap, which we need to. And as we fill the gap after 24, you'll be going back up to like the upper echelon of closing to 30, right? And 30 is not a real level. The real level is somewhere around like the 31.53. After 31.53, you're going to be heading on to a 34.69 from here. So these are the time to be a little bit more aggressive when the fear index is relatively high, right? When everybody's freaking out, that's when you should be stepping in a little bit more and hold long term, buy really good assets. Then I do like Neo as a business fundamentally. So hopefully this is helpful.